Good morning. It's Friday. The market's been open for about 4 hours. So it's midday right now. At least this is in California time. So the markets, it's funny. Yesterday somebody asked me where I thought the markets were going to go today, and I told them I didn't know, but I wouldn't be surprised if it went back up. And that's exactly what it did. Surprise, surprise. That's just the way the markets work. They're just not ready to come down yet. Now, this is already 25 days. It's probably the longest day in about a year. This thing's been stretched out that far. So eventually it's going to break down. All this tells me is the next downturn, I believe it's going to be a downturn. It's probably going to be pretty big, but that's not where I'm putting my money. I'm putting my money on what's happening at right now. So yesterday I mentioned that you could possibly start buying put options anytime in here, and you want to buy it further out. I would say at least 2 months, and just give it some time to start dropping. Now the market could start breaking up here, and if it did, then you'd have to get out with a loss somewhere around this area. It depends, because sometimes if it's news driven and it pops up and it comes back down, and it would come back down. So for me, that would be ideal. I haven't bought any more put options yet. I had mentioned I sold mine, and I made a profit on that. And it would be ideal if the market came up here and it popped up again one more time and came down. That'd be the perfect situation for getting in again short. So I would be looking for something like that. In the meantime, I'm not trading yet. I'm just waiting, and I'm waiting for those opportunities. I always wait for the market to hit the top when I'm shorting, or hit the bottom when I'm going long, and that's just my strategy. If you're day trading, so here's a day trade. So day trade would be pretty simple too, because now it's in this balance area right here. So I would wait for a breakout. Now you got to remember it's midday. So midday, usually the market, not always, but it starts to go in a certain direction for that day. Usually around this time, or maybe an hour from now, then it starts to take off in that direction. So it could go up, or it could break down and start going down. But I would not, if I'm day trading, I would not move until it broke out of this box. Now, if it broke out of this box now, then I would be careful, because it is kind of early and it could reverse and turn around. If it broke out around 11:30, close to 12, then that's what I would do. I would probably go long in there. But I'm leaning more towards the market going down. So with that feeling, I would wait. If it did break out, I would not buy any call options or go long. Just me. Not to say that's right. It could go up. But I just have a feeling this is a little bit heavy here, and I would have a tendency of shorting this. And if that's true, this got strung out a little bit longer. It could be a good time to go short or buy some short positions. And if it did start coming up, then you get out with a small loss. That would be my play as far as day trading. So longer term trading, nothing. I'm not, like I said, I'm waiting for this market to either reverse and come back down and start dropping, or if it came up here and it popped up and came down, perfect time to get in. So that's what I'm waiting for. So I had another comment, somebody mentioning that I don't use any candles or any indicators, and I was thinking about that. If I didn't even know what was happening with the economy, if there was even a war going on, all I did was look at these charts. I can trade by doing that. I don't have to know what's going on, because everything that's going on is right here. And all I do is look at balance areas, and just like I mentioned earlier, how I would day trade, not knowing if there's anything going on out in the world. It's all right here. And so I don't need to look at any indicators, different colored charts, multiple screens. This is it right here, and this is how I've been trading for years. So that's how simple this can be. Of course, if you're a day trader, you're going in and out 5 to 10 times a day. Different story. You probably need to keep up on that stuff and know when these reports are coming out, because that's going to move the market. Not to say those reports are real, because they're not, but they do. The market does move. So that would be important. But for me, longer term trader, and I don't trade that often, but when I do trade, I trade big. And when the market moves, I make pretty good money. I would say equivalent to what a day trader makes in a month, trading in and out, multiple times in a day. And so that's my strategy. It might not work for you. But in the meantime, I'm not, like I said, I'm not going to day trade or anything. I'm just going to take off, go to the beach, go somewhere. I'm going to the gym for sure. But I don't have to be stuck to this computer. I don't have to know what the news says or even what's going on in the rest of the world. Because all I'm looking at is this right here. All right, so let's take a look at the Dow Jones. Same thing with the Dow, pretty much been balancing out in this area right there. And it's pretty much staying there. It did pop down right here, but it came right back up. And same thing with the NASDAQ. NASDAQ is pretty much balancing out in this area. Right about there. So these lines aren't perfect, but it comes close. And basically it just tells you that the market is pretty much just it's complacent. That's what it is. Basically you're just kind of in this area. And eventually it's going to have to break out because this is strung out too long, and that's just the way things work. Okay, so Russell, because these are the 4 indexes that I look at, and there's a Russell, did a gap up, and Russell's pretty much staying in this balance area, and it's been here for a long time. Since March, all the way back here, it's been balancing out. Long term, it's been balancing out for months. So longer term. So longer term on the Russell, you can see the Russell had a pretty big balance area here, and it balanced out for a whole year, actually. Then it balanced here, and then this is another big balance area right here. So pretty much hits these big balance areas and it stays there. So Russell's pretty consistent. And so now it's in this pretty big balance area. And if it breaks down here, which I believe it will, then it's going to start heading down to maybe here. So that could be a spot. But anyway, that has nothing to do with us. We're here to make some money, and we're paying attention to what's going on in this moment right now. Okay, and you can see the VIX has started to come down again. So, it's just jumping around. It's building a nice little balance area in here. And eventually, because VIX is at its bottom, so eventually it's going to start coming up here. And then you can see the other indexes, they're at their top. They're up here. So they're going to start coming down. Like I said, in the meantime, I'm just sitting, I'm waiting, not buying anything right now. I'm completely out of the market. So I'll let you know when I start to get in. Like I said, I look for opportunities. And when I see some big opportunities, I really pour a lot of money into it. And I do the opposite of what a lot of people do. They don't do that. They kind of scale in and out. I don't usually scale in and out. Sometimes I do. I think I did here. But I usually put in really big positions in a trade I think is a 90% sure chance it's going to go in that direction. So pretty much I bet the farm on that, and I've done that a couple times, lots of times actually. And like I said, I only do that when I'm pretty sure that's where the market's going to go. So again, if this market comes back up here next week, pops up here on news, comes down, then that's going to be a perfect trade for me shorting this. And that's what I wait for. The other way is if this comes down and it breaks down and it comes back up and hits this spot and then comes down again, then I get in. But you have to remember that that's what it did here, and then it went back up in here. So you have to watch out for that. I think this is pretty long right here, so I don't think it's going to do that, but it might. You know, everything might be kind of teetering on what's going to happen next. And I just have a feeling whatever is coming up in the next couple weeks or month is probably going to be pretty big. And that's going to shake the market in either direction. I'm sure it's going to go down. So we'll just wait for that. But the point is, you can really make a lot of money doing this, or you can just make a living. If you're making $100,000 a year, you can easily do that here and not spend the whole day, you know, maybe even half an hour or 45 minutes on these charts. And not even that, actually. And then you're done. You know, if you're trading like I am, and that's swing trading. If you're day trading, different story. Okay, so I'm going to wrap this up. That's it for now. I'll talk to you guys next week.